Good afternoon.
Good afternoon, everyone. How are you keeping? You okay? How's weather your end?
Yes, thank you for asking.
Here in Leeds, it's nice weather today, sunny, around 15 temperature, which is good. Okay, hope your end will be sunny too. Okay, anybody any question before starting, please, if you have?
Yes, I've got a question. I was doing this assignment basically. Just need to know, is there a new, word limit for the assignment, or there isn't any?
Mm, just as long meet the criteria, which is absolutely fine.
Right. But when I was reading the criteria, I didn't find any, the word limit there.
No worries, because normally you can say up to 3,000, absolutely fine.
Up to 3,000. Right. Okay.
Yeah.
Thank you very much for that. Thank you.
Welcome. Okay, welcome. We'll start. Please, if any other question you can ask. So we'll start. So today lesson will go through our LO2 learning outcome 2. As you know me, my name is Anjum Satar. If you have any question, please drop me email anjum@uversity.co.uk and I'll try my best to get back to you as soon as possible. So today lesson is LO2, which is about be able to assess the impact of the relevant taxes in a given situation. And during our last lesson, we discussed about the resident tax rate, employment, saving income, inherent tax. We mentioned it's better to use Finance Act 2023. If you want to use any other, just it's no harm, but just try to apply the rates accordingly then. But better to be used the latest. So we can apply. So a couple of examples, maybe you'll see Finance Act 2016, 20, 21, 20, 21, 2. So no harm, but try to be latest, because in the real world we use the latest. Okay, it's a matter of applying the weight. So always good to be scale 1 to 10, your current knowledge about the tax return. So CT 600, self-assessment, or any other. So always good to be do your reflection, yourself, you can reflect how much I know. So identify the key advice that required to be supplied on the tax applicable, which we'll go through, and a specific situation. So we'll go through different situation, tax planning, calculation of the tax, how we can do, how we can apply the rates, all will be, and of course, different courts of, in different situation, tax planning is illegal. So what will be benefit for our client, if we do, and in the favor of the client, how the client can save the tax. Okay, so we mentioned last lesson the rates. So please here, these are the rates, Finance Act 2023. So base rate is, of course, 12,570 is no tax personal allowance, and if anybody earn 1 to 37,700, 20% tax, and if the dividend rate is 8.75. Higher rate is 37,701, and then of course additional rate is 45%. So please, we need to look around the rate, we need to look around the income, personal allowance 12,570, transferable amount if your partner is 1260, income limit, we can look around, and then if anyone earning more than 125,000, 140 or more, the personal allowance will be zero. So you can't claim really every £100, every 100,000, every £1 will be half, until 125,000, 140 if you earn. So we can look around the resident rule, of course, resident status, the ties, and domicile, all we need to look around. Child benefit, of course, if you're earning income between 50 to 60,000, the change is 1% of amount of the child benefit received for every £100. So we can look around, that's also a fact as well. 100% property income cost are subject to the basic, the rate restriction, which we can look around. In terms of the cars, we have to look around the CO2 levels and all, those. Just look around the rate, if an electric car, we look around the mileage claim, 45p, 25p, 10,000. We can look around the personal allowance on capital allowance on the plant and machinery, corporation tax, and marginal relief, which we can calculate according to upper and lower limit. We can look around the penalties if we not follow the rates, and if we not submit the things accordingly. And the VAT, of course, 85,000, and you can deregister yourself if your turnover is 83,000. So yes, all the penalties. So we can look around these accordingly. The insurance, all the rates. So 2.1, apply the tax in a given. So calculation of income tax, we can look around different component, total income from all the component, non-saving, saving, employment, property income, all, which we can. The tax rate, as we mentioned, 20, 40, and 45%. So let's please, we can look around. This is for the tax rate, tax year 2021. The Joe has salary of 46,500 and saving income 2,000, and dividend income 6,000. And during the year, he paid the interest of 300, which is for qualified purposes. So we can look around here how much we deducted at the source. In that year, we can look around those years rate if you apply, or we can apply 2023 and the same income. So last lesson I shared with you the handout, which I can reshare. We have plenty of example there as well, which is quite good to use for your assignment purposes. Finance Act 2023. I'm just sharing with you now. Okay, so here please, I shared with you now, so you can download. We can look around if you apply this year rate and look the previous year, what effect will be. So always it's good to apply the latest. Okay, so please, you can download. So we have plenty of here examples as we discussed in the previous lesson as well. So if you want to pick the example from the latest Finance Act and according to the latest rate, which we can pick, this example from this handout, which I just shared with you. Okay, so we'll go back to. Okay. Okay, so please. So if we look in this scenario, what will be? So we have 46,500 in that year. There was a personal allowance different because this year is the personal allowance is 12,570. Saving income 2,000, dividend income 6,000, interest paid is being, and 12,500 was this is the personal allowance. So now if we minus that, so our income left from non-saving 33,700. Then we have 2,000 saving income. So first 2,000, and then we have a 6,000 dividend. Total income is 41,700 after personal allowance. So now if we calculate the tax, 20%. So previously was 33,700 will be 20%, and then remaining we can look around and we'll calculate the rate accordingly. So we have the first 500 because the basic taxpayer, and first 500 for the saving income is exempt addition, which is 2,000 was, so 20% will be tax. And then dividend, first 2,000 exempt dividend, and remaining because now we look, the income in this case is a higher, we can look around the rate is 32.5%, and we'll charge, that. So if we look here, that's the tax liability we have to, if any tax being paid at source, like, deducted from salaries, pay as you earn. So the income tax payable is 1540. That's still, the liability. So we can calculate these in. So please, Joe is the higher taxpayer. So his saving nil band is 500. The dividend nil rate is up to the basic remaining income is 18. So we can look around if we transfer the saving income or dividend nil rate will mean taxpayer don't have any tax liability in respect of the saving or the dividend income. So we have to think about if we are married couple and then we can transfer there. Let's we look in this scenario which is 2.2, apply the tax advantage and disadvantage different course of action. So we can look around. We have a Donald and Teresa in that case, married couple. The income of Teresa is 18,000. Donald is 60,000. Interest is 2,000. Dividend is 9,000. In that case, it is clearly above the information who is the higher income. Of course, husband higher income than wife. And we can look around. If we take out 12 and a half, remaining income 47,500. So Teresa is a basic taxpayer and will taxable income 16,000, 18,000 plus 2,000 plus 9,000 and then minus 12,500 as a personal allowance. So in this we can look around. Normally be the case of the tax planning purposes would be advisable. Any investment would be moved from higher tax rate taxpayer to the basic taxpayer, so that can be good is a saving. So in this case, if we look, introducing of course on the saving. Yes, so if we example, we can look around the 500 interest could be made, and therefore you do the saving income nil when 500 the currently is being based, because in term of the journal can be, we can look around. The husband can get 500 pound saving because the income, we need to look around the band. Any question please, anyone? The income is being taxed, the 20% in that case. So it's a matter of applying the rates, as looking. So we can advise, so in that case, 1,000 and 2,000 minus 1,000 is a 20%, so 200. So if she transfer 500 to her husband, so he would use his nil rate band and she would save 20% of 500, 100 pounds. The second transfer would be sufficient share move 2,000 of dividend income from Teresa to husband, and then both use the dividend income nil rate up to 2,000. Okay? So those we can look around and we can transfer accordingly. Anybody any question please? If you have, you can ask. Okay. Then we have 2.3, assess the secretary obligation by law. What we have to do. If you don't submit your tax return on the 31st January, we have to pay the £100 fine, £10 per day, maximum 90 days, 5% tax due, minimum 300, and 100% of the tax due if deliberately and conceal, and up to 70% due deliberately but not conceal, and 5% tax due otherwise, minimum 300 each case. So we can look around. These are the fines we have to be careful all these. We've been given the Finance Act here, so we can apply that Finance Act and we can look around for their examples. So penalties, if we have the penalties in error, careless, deliberately but no arrangement to conceal, deliberately arrangement to conceal. So these all we need to be look around 30-70% fine of the tax, prompt disclosures or disclosure. So it can be by the percentage apply accordingly. So we have to look around the scenario of the client and we have to advise them accordingly. So careless is 30%. We can look around deliberately but not conceal, deliberately but conceal. So we have to look around these and we have to pay the. Okay, so record must be kept. We can look around up to 6 years. So we have to keep the record, we have to up to 31st January for we can submit the tax return. So it can be fine if we don't have keep the record, or can be HMRC can ask. So payment of the tax account must be made 31st January the following 31st. So we can look around in terms of, if we look the VATs and different scheme we can use as well. So payment of account is not required. The prior year of income, 1,000 or more, 80% of the prior year liability material. So these are different rules we have to look around each finance act. So as we mentioned, the late tax, the penalty, late payments of the tax interest. So normally the base rate really is material. So we have to look around those. 5% of the unpaid tax, 10% of the unpaid tax, and 15% unpaid tax as well. So these can be charged extra. So non-compliance may be result in the fine or litigations or other consequences for the clients. We have to look around the material and evidence, and we have to work in the best interest of the public, and we need to be, as accountant, we have moral and ethical principle, 5 professional code of ethics, those we can look around as well. Okay, so then if you want to look around the merit criteria, please, to assess the effect of the taxation on the financial decision make individual and the business. So we have to think about, any decision really we make tax, any asset you want to buy, so we have to look around the capital, first year allowance, or capital gain tax, and all these, we have to plan things accordingly. So employees doesn't often need to be spend, a lot of time thinking about the tax at the national insurance number deduct from their gross monthly salary. Of course, it can be deducted as source. But of course, your employer can increase or decrease the tax code if those are allowable expenses. The corporation tax or the business tax is charged on the profit of the company, and corporation tax is similar to the income tax, but of course, is the rate, so we have a 19% business taxation affect the business cost, and example rising if the increase in the corporation tax can affect increase the cost ultimately we have to look around VAT. Of course, we always need to be look around, and we look the VAT value added tax. We need to be look around different rates. So as we mentioned, 85,000, 83,000. So you can deregister yourself if your turnover drop to 83. But it's a compulsory to register if your turnover is 85. But you can choose different accounting scheme. If you want annual accounting scheme, it means you have to do one return. Annual tax turnover not exceed. We can look around 1350,000. So which we can excluding VAT. So VAT is not included, and you can carry on registering. If is up to 1.6 million, so we can look around these accordingly. So we have to look around the turnover, and you can suggest the client which scheme is best for the client. So in annual accounting is only one return, or with the annual accounting we can use other scheme like cash accounting as well. The flat rate, yes, so flat rate is one rate. It means you can't claim on the input, but on the output you're paying less. If your turnover is 150 to 230,000, you can choose this scheme, and you can stay up to 230,000, and you pay according to depend the nature of the product, maybe 10% VAT instead of. So you don't have to keep the record. It's simply you just pay on the output. So that's the benefit, and then we can look around if we have, if you want to go through the distinction criteria, evaluate the alternative way achieving the personal and the business outcome may leads to the different consequences. The return of the company must, normally file, the release, submit, their tax return for the corporation tax release in 12 months after the end of the period, and 3 months after the notice required, the return was issued. So late, it will be penalty for individual as well as businesses. We need to be look around those according to, of course, we mentioned 31st January, and the payment of taxes due. Large companies, must pay the corporation tax. It can be in installment. Of course, we can look around quarterly installment. and those, so we have to look around the different limits, upper limits like in multiple months, like 12 months shorter accounting period, divide into 51% of the group of companies. So if it's a group of the company like associates, subsidiaries, so those elements we can discuss and allocations of. Okay, so research and development expenses. So less than 500 employees are either the turnover is 100 million, the balance sheet is 86 million spending amount. So research and development, so 230% relief, if the relief is create, and increase the loss of stranded research and development tax credit. So we can look around these, we can claim in the capital allowance, and the return we need to be look around the submission. Of course, we know the dates. If we don't submit on time, it will be consequences and the client have to pay the fine. So basis of the period rules, yes, three scenarios: the commencement of the trade, access to, the using the opening year rules, ongoing 12 months, and when you seize your business, so you have to proportion when you seize dates, you have to look around the tax, So first year tax is which the business commence and the trade, and assess the profit made the date of the commence of the business following is the 5th of April, and the second tax year see the flow chart, which we can look around 2 years if there is accounting period ending the tax year, so we can look around. Sometime it can be first less, few months, and then I will carry on doing 12 months because the accounting period and the tax year can be, and we can allocate, accordingly and divide, because the different tax rate and overlap profit, maybe tax on the same profit twice, is known as overlap profit. So we can get the relief overlap profit, and if we look, and final tax year, the year when actually the business you see the close, you really do not want to do any more business due to number of reasons. Those we need to be look around the taxable total profit, interest, other income, property income. We can look around the chargeable gain, the total profit, less, qualifying charity donation, and then we can calculate. So this is normally the template which will carry on following. Of course, nowadays, any tax software, whichever you will use, so it's a matter of, filling those, the tax return. So we can do CT 600 or self-assessments and all. So if you want to include in for the assignment purposes, you can include the form as well, which we look interest or property businesses income, which we can proportion. If it's a managing company, then their client account and other accounts we need to be look around, and we need to assess accordingly the accounting period. Of course, first 12 months from the first accounting period, and remaining months, for the second accounting period. So we can proportion the tax purposes point of view. Longer period we have to divide into 12 and proportion accordingly, and the tax rate, will apply. So tax gap, create the new overlap from the year before relief, So if it's the losses and the relief which we can claim. So please go through the chapter 15 of corporation tax. So I shared with you the document, which I'm re-sharing with you in a minute. So it's good to, we can pick, some question for the sake of, looking some examples, how we can apply the rates. Huh? So just 1 second, I'm sharing with you. Give me 1 minute. I'm just sharing with you, please. It's good to use latest document, and we have a corporation tax example, which we can. Okay. So I'm sharing this. The correct one. Yes. I'll go through. Okay, so we have Finance Act document. We have Open Tuition document, which is quite good booklet to use. Second, I'm sharing with you, and we'll go through one question, two questions. We can look around. Okay. So please, if you look this book, which is quite good, we have good few examples for our assignment. We can pick, from these. If you want to look around the corporation tax, please. So here you will see this chapter 15, please, which is given 133 page. And if I look, this further down page, you can. So please, in this chapter, you've been given the corporation tax. Yes, and it's good to look around some example of corporation tax. Yes, the rate of corporation tax we mentioned, and we looking different period. Yes, like 1st April till 31st March. So Finance Act 23-24 really we applying for. We given the marginal relief example, upper and lower limits. Yes, we will given the rates. And so please, it's good examples which we can look around for our tax calculation purposes. Okay, anybody any question? So please, for assignment purposes, it's good to be for our merit criteria, distinction criteria. We can add, good few example to justify and showing, some calculations. Of course, we can use these examples. Please, you can underneath you can explain them, which is absolutely fine, for the sake of, to meet the criteria. Okay, any question from anyone? Okay, so today we discuss about our LO2 learning outcome. We look around the tax planning, how we can husband, wife, partner, how we can transfer, and we can advise them, how the client can save the tax planning, the legal, which we can advise clients, and the corporation tax, how we can proportion the periods, and in between, if we don't submit on time, of course, the penalties we mentioned, like £100, we don't submit up to 31st January of the following years, and then of course, the late payments and those penalties. And we discuss about the VAT value added tax, which is we discuss about threshold, which is 85,000, and if your turnover drop 83, then you can deregister. But if you want to carry on as voluntary registered, you can. And of course, we can adopt whichever scheme suits you: annual accounting, cash accounting, flat rate, the standard VAT, you do quarterly return as you, and whichever it suits, to client, which will carry on doing return according. Yes, of course, we can look around the group companies and these losses and capital allowance, we can claim as well. Annual investment allowance, we can look around. And please, we can apply Finance Act 2023, good to be. And if you don't want to apply this one, you have previous year example, it's fine, example you can include, but reapply, like, the personal allowance this year is 12,570, which we can, or if you look the previous year, it was 12,500. So that's all from my end. Any question from anyone? Can you hear me?
Yeah, sorry. Yes, I can hear you. I've got a few questions, if it's all right.
Yes, sure, please.
Basically, the PowerPoint slides, which I've downloaded from the site, is slightly different. The one you have showed me today. Your PowerPoint slides are pretty good. So, would there be any chance I can download it from the website, or from where I can get that? Because the ones I've got it is slightly different.
Yes, it's been updated, so I'm going to share with you now. State.
That's perfect. And the second question is, due to some personal reasons, I didn't actually attended the first session. Is it possible I can get the notes, from the first session, where I can get that from?
Which I'm going to send you all the lesson slide now. State in the chat.
That will be great. That will be great. Thank you.
I'm sending you all possible handouts. Yes,
Fantastic. That's from the lesson one as well, yeah?
lesson one as well.
Fantastic.
All the rates and yes, please, all in your.
Let me just have a look.
I'm in your chat box.
Yeah, I'm getting that now. Yeah, fantastic.
LO1 latest, LO2 latest, 3 latest, and 4. Is it the rates being changed?
Yeah, that's why I was asking it.
So of course, in terms of the assignment, you can pick any example of, because maybe you have, but just GDPR. Your clients, of course, will not use their, but generic you can or amend their details, which is absolutely fine to use.
That's fine. That's fine.
Attach, CT 600 or any other self-assessment, individual and all. So that's all, from my end. And next lesson we'll go through LO3. And please, if you have any question, we can go through. And in terms of ACC, this handout, we have a quite good example. So you've been given, like different scenario, different example, and all the calculation of the rates. So rates, of course, is carry on vary. Yes, of course, every year carry on changing. So you can apply whichever you like to apply. Yes. So no hard and fast rule, but better to be applied 2023 and 24, because until 31st January we can apply. Okay, thank you. Have a nice weekend, and I'll speak to you next week. Thank you.
Thank you so much.
Thank you. Bye-bye.
Bye.